Okay, well, hello everybody, and we have our crypto panel here today. Very much looking forward to it. I'm Dan Hughes. We've got Sandra Familet, we got Marc Powers, Pat LaVecchia, and Maggie Fang here on the panel. Each of them has a very unique exposure to the crypto asset class, which we're going to hear more about. As a nice way to kind of lead us off, we're going to give a quick round of introductions on pretty much who we are and what we do, and how we kind of tie in before we lead off into the questions, which we'll go down through. So my name is Dan Hughes. I'm the managing director at Hughes & Company. We're a introducing brokerage firm on the futures side, where we work with institutional wealth advisors who trade in the futures landscape known as CTAs. Also, I'm the CEO of the Futures Crowd, which is a managed account platform which will help bring that managed futures industry more available to the wider demographic. Prior to that, I was with TradeStation Securities, Deutsche Bank in New York City, before starting off in private equity at Camden Partners, Baltimore. And next, I'll lead off to Sandra to give her.
Thank you, Dan. I'm Sandra Familet Lufkin. I am co-CIO of my own family office along with my husband. Also, I'm a venture partner at Hut Capital. That is a pure venture fund of funds. There are other venture funds out there that actually marry also the liquid side of things, the hedge fund side of things. But Hut Capital is blockchain fund of funds. My background, I grew up on the trading floors of Merrill and Goldman Sachs. I was on the equity trading floor, fixed income, commodities, foreign exchange. And one other thing I should mention was during my time on the trading floor, I actually met the founders of BlackRock. Larry Fink had asked me to be the right-hand person. I helped with the branding, raising of the assets. This was all pre-IPO, so I raised billions of dollars for BlackRock and stayed post-IPO.
Now we got Marc Powers.
Hey everyone, Marc Powers. I've been the last year teaching as an adjunct professor at Florida International University here in Miami. I teach a class that I set up called Blockchain, Crypto, and Regulatory Issues. And this past semester, another class called FinTech Law. I did it in part because I retired from the practice of law after 40 years, 5 years spent at the SEC. I thought after 40 years, I figured it out. And I moved on from my big law firm practice at Reed Smith and Baker Hostetler, where I ran its SEC practice, it's a hedge fund industry practice, and its securities litigation practice. So since 2017, I've been involved with blockchain. And part of that is the reason why I stopped working at law firms. I love the space. I think it's fascinating. I like the idea that I'm able to pontificate to my law students who call me Professor Powers.
Yeah.
I get to write a column monthly now that my firm can't censor. Say, no, you can't say it about Gensler, Chairman Gensler. No, I can.
Where is that column? Because it's a great column. I see it all.
Yeah. Well, thank you, Marty. It's in cointelegraph.com. I write a monthly column there starting January of this year. Both in the magazine section and the regular section. My last column was on that we need to be teaching law students about blockchain and DeFi and NFTs in law school. I mean, right now it's only about 10%. And then, of course, I do rag on the regulators, and I get to do that freely as long as I say it honestly and truthfully. So that's my background. I spent since 17 investing in the space and also representing clients in the space. So I have that credibility of been there and involved in the area. Thank you.
Okay, then we've got Pat LaVecchia.
Thank you, Dan. Hi, everybody. Pat LaVecchia. I'm CEO of Oasis Pro Markets. Oasis is a broker-dealer. We're one of the few broker-dealers registered as an ATS for digital securities. We're also the only registered ATS for what we define as digital cash for digital securities. Digital cash meaning stable coins, all different types, which we'll be talking about a bit later, as well as CBDCs. We are expanding that to include Bitcoin and ETH and Litecoin and some other cryptos as well when we launch at the end of Q1 2022. A bit about my background: 25 plus years Wall Street, Bear Stearns, JP Morgan, Credit Suisse. I was both on the trading floor and primarily in investment banking. About 3 years ago, started getting involved in the crypto space. About 2.5 years ago, a major DeFi, decentralized finance player, and I became partners. That DeFi player is MakerDAO, if any of you are familiar with the space. MakerDAO invested a sizable amount, $6.5 million, to go down the real world assets for DeFi play. And we got approved, and we'll be launching at the end of Q1. What we're approved for is all equities exempt, as well as over-the-counter equities, all fixed income, all structured products, closed-end mutual funds, and ETFs shortly. And this is all the future. In 10 years, this will be ubiquitous. We're at the early stages right now, but there is movement in the space, and we'll talk a bit about DTCC and what's happening with the SEC and FINRA in a bit. Very excited to be here, and Marty, thank you for the invitation.
Perfect. I've been told, Pat, you need to move closer.
Okay.
Somehow you have to punch in closer here.
Okay.
We're going to make it work.
And then at the end, we've got Maggie Fang. Maggie, if you'd like to give us a little introduction on yourself.
Sure. Hi, everybody. My name is Maggie Fang. I am the founder and the managing partner of Wynsun Capital Management. I founded the company back in January 2014. We are a tech private equity fund. Some of the well-known names we invest in is Alibaba, Uber. We had a pretty, I would say, successful track record. However, more importantly today, I'm speaking for my new company. Now I'm a founder and CEO of Matalantis Group, Inc. And so Matalantis is a NFT and metaverse company. We target sports industry, entertainment industry. The reason that I founded this year is because we were actively looking into investing in blockchain, crypto, NFT projects. Well, I was looking from an investor perspective. I realized a unique opportunity that I could realize as a founder. So to somebody think I upgraded myself, somebody think I downgraded myself, but from an investor, I become a founder. So Matalantis' main edge is that we have access to some of the most well-known world-class sports organizations in the world. We have signed some of the world's most famous athletes, and also in active working with well-known clubs and leagues. We are launching in January, so we're very much still in stealth mode. I can talk briefly and vaguely about our products, but what I want to focus today on the talk is to discuss about NFT and metaverse with you all and explain to you why we think that this is the most exciting sector right now on planet Earth and what justifies the exponential growth that we have seen and will come.
Okay, perfect, Maggie. So it also is great that we have everyone here today. So thank you, everybody, for coming on down. And we'll start off with Sandra. Basically, as a family office, what is your advice on how a family office can start to educate themselves in space?
So first of all, I want a show of hands. How many people have actually invested in this space? Okay, so I would say about 40%. That's great. So for the 60% that have not, it's probably you're on the sidelines, and I'm going to guess maybe because of fear, because you really just don't understand it. And that's a very legitimate reason. But, one person had said to me once that, do you know exactly how Apple makes their computer or Tesla actually builds their car? And they were some of the best stocks to have invested in. So this is something that's probably here to stay. I think that most people have realized that now. And so really, it's probably the best opportunity of our lifetime. And so the name of the game really is to get educated. So what I wanted to share with you was how did my husband and I get educated in this space? We started to invest in 2016. We knew Barry Silbert when he was still with Second Market, just doing secondary trades. And then he just morphed into Digital Currency Group. So it was an amazing thing to see, but we actually knew him. We got educated there. We actually befriended the two research people at Cambridge Associates. Cambridge Associates, as many of you know, is the consultants for a lot of the endowments. When they were writing that well-known white paper, we befriended both of them. And within the year that they wrote the white paper, both of them quit Cambridge to actually go into this space full time. That's actually saying something. But it was basically at the time they thought that venture was a very interesting space and that the smaller managers would do extremely well because they're very, very nimble. We actually even befriended the son of Cambridge Associates who started to invest in this space. And he had said, the most important thing that you do when you start out in the space is don't put all your eggs in one basket. So as a family office, this is what we did. My husband had a background. He was one of the top CLO hedge fund managers. So he was going to do the liquid side of things. We're an odd family office because we actually do the liquid side, like what the hedge fund managers would do in-house. My husband trades 30 of the different coins and tokens. I am a crypto widow because he really is, he's actually, trading during the day, then goes to sleep and then gets up at say 2 in the morning to trade the Asian markets, which a lot of the times is even more active than the other markets. I have been in venture my entire life. I ran Entrepreneur of the Year. I took one of the winners was Michael Dell. I took them public. Then with Silver Lake, we took them private. So I have been around venture and private equity. I was also part of the private equity funds group at Merrill, where we did 21 fundraisers a year, like Silver Lake 1, Silver Lake 2. So I saw the creme de la creme of venture. So I do all the venture things. So what we decided to do was, we don't have a really very big staff, but we decided that we're going to actually invest in a couple of the managers so that can be an extension of our resources. And also, I really started to look into the fund-to-fund sector. I didn't believe in fund-to-funds because the fees on top of fees, but what's happening right now is some of the best blockchain venture managers are oversubscribed before they even put out their presentation deck. So a lot of the family offices are getting closed out of the venture side of things. And so in this particular stance, I really do believe that a Hut Capital, for example, that is invested in a lot of the oversubscribed, hard to get venture managers. And you also have diversification because it's also, this is a global thing. So you have Asia, you have Europe, you have here in the US, you really want a global exposure, but you also want exposure to like the DeFi managers, the NFT managers. So that's how we decided to first do it.
Okay. And then a good question is, what are you doing differently today than you might have done, let's say 5 years ago?
We're leaning on our managers more and more by having more interactive calls with them. We are just doing more and more in-house. You don't have to, hire a manager for everything. But what we did do was we got an amazing CFO who also had his own tax practice.
Okay.
And so for a family office, especially doing a lot in this space, we're about 40% in this space. That was very good to have.
Okay. And then what would you say to those families who are still on the sidelines, who feel they might have missed out on the move in crypto? And, if they're not 100% sure on where they should go from here.
Yeah. So not everyone's going to do what we did. My husband just loves to trade the market. So he has the stomach for it. It's a very steep learning curve, but I would highly recommend that you educate yourself. There are many books out now which are really great that can give you the basics, and then maybe invest in one hedge fund manager or one, venture manager, or like a HUD Capital. But definitely educate yourself, because a lot of the families that were looking at the space some time ago now really say, you know what, I'm so sorry that I didn't invest. But you know what, a lot of the institutional investors have not even gotten into it yet. And so therefore, once that institutional money really turns, so now is still a very good time to invest. You haven't missed. We're still in the early innings.
Okay. And then what would be your competitive kind of advantage in the space? And your greatest fear also, being in the space?
Okay, so as I had mentioned, my husband was a hedge fund manager and I was in venture. So that's very unusual for a family office to, for two co-CIOs to actually have a financial background. A lot of the families, I'm sure here, have an amazing company that they had built from scratch, but particularly not in finance. So we had that competitive advantage, and we had friends in the industry. My husband grew up with Tim Draper. He fell out of the tree, and Bill Draper had to take him to the hospital when he was 5 years old. So we had friends that were already heavy in this space.
Okay,
But our greatest fear, I have to tell you, the greatest fear is actually being hacked. My husband is trading the different coins, and we're not on the centralized exchanges. We're on the DeFi. And so my greatest fear is him traveling in a hotel room and trading. You just don't really know how to really protect yourself. And unfortunately, a lot of the cybersecurity, a lot of those companies are still targeting institutional people and not really the family office. I don't believe there still is a very good solution for a family office.
Yeah, definitely on the traditional TradeFi that I operate in, you'll definitely see a lot of those cybersecurity and measures kind of come into the crypto space, to afford investor protections. And the industry is definitely developing, as you see, obviously, a lot of managers going into the space. And that brings us to another good transition, just in the legal kind of structure overall. I mean, Marc, this is kind of your wheelhouse, being a professor. You mentioned CBDC, and a good question is, what is that? And
yeah, so central bank digital currency. So before I get there, I just want to say that Sandra, right? She's doing amazing. She's been in so early. She knows some of the top players in this space. So Sandra has been in this space a considerable period of time, and the name if you're not familiar with the space and the icons in the space, she knows them all. And the fact that she, that she does, she's got access to all these opportunities says something, right? Because I invest in the space also. From my perspective, before I get to things, I look at, if you're not, I find it interesting. I did this, Marty's been nice enough to have me doing this for a couple of years at this point, both here in Miami and in New York when I was over at Baker still. And I remember in 2018, when I think he allowed me to do a program on cryptocurrencies then, and in the room, how many people had invested? One. Now the idea that it's 40 or 50% speaks volumes, right? But it doesn't necessarily surprise me, because that's what, hedge family offices are one of the early types of investors that are willing to take risks, more risk potentially, or at least get involved in alternative investments. So with that, I will say, though, that I think that the mix for those that aren't in it are tokens, investing directly in tokens, not necessarily on the centralized exchanges. Secondly, buying the equity, which is obviously what Sandra's fund does, right? Buying direct investments in these startups that are in the blockchain space. And the third area are stocks, regular traditional stocks that you can buy today, tomorrow, right? There are mining companies, HUD 8, for example. There are, MicroStrategy, right? He buys Bitcoin. So, you're starting to see those in public companies that are involved in the space. So those are easy ways to get involved. But let's talk about some legal stuff, right? So, and my perspective, at least on it, apart from the fact of the securities, the actual securities issues, central bank digital currencies are the concept of our Fed finally realizing that we need to go digital with assets. And one of the assets and one of the currencies that has to go digital with is the dollar. And the movement has been around the world, and particularly the leader right now is China, is creating digital currencies, and they have created the IvyFON. They already started this project back in 2014, and we are doing catch up from my perspective, right? They already have distributed in the four major cities in their country, $200 million worth, 200 million yuan, or $30 million worth of tokens that are distributed for commerce. There are some American companies that are part of the pilot program, such as Starbucks, McDonald's, but there are 17 or 18 local companies that are doing it also, Ant Financial and a few others there. We are nowhere close to being where they are. And why are they doing that? Why? Because we currently, the dollar is the reserve currency, right? That's not going to be the case in 10 years if we don't get our act together. Maybe it's 15 years. Part of the concern, back, we all know about Bretton Woods, 1944, where there was agreement among most of the world, the victors during World War II, to put their currencies fixed to the dollar, right? And the United States agreed, the countries agreed to have the United States become the reserve currency for the entire world if we agreed to fix our currency, our dollar, at $35 an ounce. That went away when inflation occurred here in the United States, and there were instabilities in trade balances. That went away in 1971 when Nixon took us back off the dollar, and we effectively became what people call fiat currency. By the fiat of what we say, it's a king, right, commands things. There are no currencies in this entire country, in the entire world, that are based on anything. So the idea that you get scared of blockchain when people say, well, what's Bitcoin? It's not based on anything. It's no different, right? What's backing up the dollar? Nothing but the full faith and credit of the government. What's backing up blockchain or Bitcoin? The belief in the blockchain being immutable, can't be changed. The belief in it being something that can't be hacked. It's never been hacked since 2009, right? So we are now at the point where we're trying to do catch up, from my point of view, with China and other parts of the world to create a central bank digital currency. I believe personally, Jerome J. Powell's gone on the right track. He is much more sympathetic than Yellen is, unfortunately. We made a lot of progress with the prior acting director of the OCC, Brian Brooks, who actually started to allow banks to now hold digital assets and custody them. There's been the integration more and more over the last 18 months of allowing our financial system to adapt to blockchain and what it means. And if you look at it as a technology and you get away from the fear that what the heck is this? And you look at it, that's just another form of technology like the internet was, right? This is the early days. I would totally agree with Sandra. And just like you had early winners and losers, hey, Amazon didn't start till 2004, right? So that was a dozen years after the internet really started. So there's still plenty of time to make those investments.
And do you think a continuing adoption of Bitcoin could potentially harm the financial system as we kind of see it now? Or? So
two-prong answer. I'll keep this one short because I want to get to my third one that you're going to ask me. All right.
Yeah.
The answer is no. I don't see it harming our financial system per se, but I think it will change and disintermediate. That's the concept of what blockchain provides. Efficiency, gets rid of the banks and brokerage industry. If you really look at what's occurred now, the fact that people are trading directly on Coinbase, which is not a registered broker dealer here in the U.S. They're not regulated by the SEC at all. All right. Bank broker dealers are already being disintermediated. People are going directly to the exchanges and doing transactions on exchanges, and that's on a centralized exchange. Forget about on the decentralized exchanges, which is what Sandra was talking about. So I don't think so I do think there will be harm. It won't harm our financial system. I believe ultimately there'll be a dual system. One, a digital asset system, one, the traditional system, where now we will have an e-dollar. That's what's going to happen. But I do see a potential harm to our economy, not a financial system, to our economy in the following way. The Fed we use here, and most countries use central banks to stimulate, create monetary policy. They use for creation of monetary policy and dictating monetary policy. They limit the supply of dollars. They extend the supply of dollars. That influence is going to wane as the secondary system occurs.
Okay. That'll be quite interesting, especially because then they kind of lose the interest rate. But question, yeah.
Yeah, so we've had a lot of crypto people pass through our presentations over the years, and I see that there's this kind of dual force here going on. There's a different ethos, right? Actually, maybe three. But one of them is that China is saying no crypto is dangerous to China, right? And the United States is saying crypto is an asset, and we want as many assets as possible in domestic, domiciled in the U.S., right? It's always been that way, whether it's foreigners buying U.S. real estate or whatever. But there's a lot of people who hold crypto around the world, right, who want to see the U.S. as being asset friendly. If you guys can comment on that, that'd be great. In terms of the ethos. Some people are running away from it, closing their doors and windows and saying stay away. Other people are rushing towards it, saying this is real. It's something we got to do. Any thoughts?
Yeah, that's a good question that ties in with what Marc was going to mention now. Where do you see the SEC kind of heading?
Right. So I'll turn it over to others to answer your question, Mark. But the quick answer to your immediate question is, I think China is barring crypto in their country because they want to promote the yuan, right? They want that to be the play. And they want that to be the only play, because a lot of these other types of cryptos are a form of currency to some degree. Not necessarily, but to some degree. And they don't want investments. They don't want speculation. They want that to be the play there. Let me touch briefly then. Well, maybe other people answer any other thoughts
Sure.
on to Marty's question, then I'll come back to mine.
Sure. Yeah, I agree with Marc's comments that's why China is closing it off. They want to. The view is they want to be the reserve currency of the world, maybe in 20, 30, 40 years. They have a long-term view versus the U.S. Here in the U.S., you have two arguments. The U.S. is, from a regulatory standpoint, we're in the regulatory area. So where Dan mentioned TradFi, we're TradFi, CFI, meaning centralized finance, to DeFi. We're the bridge. We cover all those aspects. And the U.S. is moving in that direction, but it's very slow. I don't blame the regulators. They're all playing catch up. The Europeans just last week came out with, through FATFA, a guidance regarding how the EU markets will grow in a pilot program with digital securities and digital tokens. Singapore, the rest of Asia is much more advanced than we are right now. And the regulators all over the world are speaking to each other. But the US is the most powerful nation in the world. And eventually, this cautious approach, I agree somewhat with Marc. I think we disagree in regards to there'll be a bifurcation. I think in 10 years, everything will be on the blockchain, because the benefits are instantaneous settlement, low counterparty risk, lower cost, transparency. That's very powerful, and capital markets right now around the world don't have any of that.
I just wanted to interject. You're not really mentioning your background, which is that you ran a broker-dealer for years. You've been in the belly of the beast. So you're just seeing us being disassembled and reassembled, right? So
that's right. Yeah, I thank you, Marty, for that. I've been through this regulatory quagmire for 15 or so years now, so I know exactly. I've experienced it firsthand. But on the other end, Brian Brooks at the OCC, before he left, he was only there for 4 months and had a nice impact. But DTCC, if you're familiar with DTCC, I'm on the executive advisory board there for private securities. And a couple of weeks ago, and that's with Goldman Sachs, Pershing, State Street, Computer Share. There's about 10 of us in that group. We were invited because of this digital cash for digital securities registration that we have. But they announced that DTCC will handle private securities in about 6 months, 2 quarters, utilizing the blockchain through the DTCC, which is remarkable if you understand our financial system.
And those are transfer agents, basically, or how does that?
Well, the DTCC, QSIP codes, et cetera, they handle all that. So this is in a way to streamline the transfer agent system, but it's also on the custodial side too. That's why State Street and many custodians were involved in this as well. So there's tremendous movement. I think, again, in 10 years, we'll all look back and be, like electronic trading 15 years ago. We're going to all look back and say, why didn't this happen sooner? But we're in Sandra said, early innings. I think we're on the way to the ballpark right now. So we're not even in the stadium.
And Mark, where do you see the SEC kind of heading? So I know.
Yeah. I got it. So I wasn't suggesting what I meant. I agree with everything will be on blockchain. I was just simply saying, though, from the dual system of money transmission, that there's going to still be two systems. There'll still be a system block of Bitcoin on the one hand and the US dollar on the other, and people will use both. But I think I'm totally with you on blockchain being the way everything's going to go, different alternative use cases and the like. I'm just going to touch on one aspect of where I see the SEC going, because I know one of our speakers is on NFTs. So I want to bring to everyone's attention, there are two lawsuits right now going on involving NFTs relating to the kind of legal issues that arise here. One involves our good friend Quentin Tarantino, who was going to do an NFT, and he was from scenes from his excerpt scenes from Pulp Fiction that never made it into the movie, that he was going to sell. I think there were 7 scenes. Marc said, "Wait a second, buddy, you're a partner, but what's going on here? You're going to do this." They went into court and they sued him. They claimed, and he kind of took the position he had reserved rights under his agreements with Miramax for the production of the film. So that's going to be an interesting lawsuit. So what am I getting at? What they sued for? They sued copyright infringement, trademark infringement, unfair competition, and the like. Okay, so those kind of legal issues are going to definitely be part of the NFT space, these IT issues. The second lawsuit, which was brought related to securities law, was brought back in May. Have you followed, the hoopla around? Well, okay, that's kind of funny. Hoopla around NBA moments, right? The NBA has NFTs now, right? They have, you can get little scenes of like LeBron James kind of doing a dunk or whatever, and you can own it. And she will explain what NFTs are if you're not really familiar with it. But there's a class action now brought in New York in state court, claiming that the NBA moments, where you buy these moments or these little scenes, are the sale of securities. And the marketplace there are securities, is a securities market that needs to be registered. So there's two kinds of securities law violations, both the offer and sale of securities, violation section 5, and then also the failure to register effectively as an exchange. Those are the kind of things that are also going to play a little bit more in the DeFi space, I think. Hasn't happened yet. I've been saying it's going to happen, and I think it will. I don't want things to go bad for these innovations, but I just think that these things are going to kind of happen. I'm not as optimistic as other players are that the U.S. will kind of get their act together in time to be the dominant force in the blockchain space. I don't think that's necessarily going to be the case, but that's the answer.
Yeah, and Pat, so basically with Oasis, you can segue right into this. Digital securities, how does that tie in? How do you see traditional securities moving on to the blockchain and your role there?
Yeah, I mentioned in my earlier comments something. So, you trade through Schwab, some of you may E-Trade, Morgan Stanley, whoever it may be. You don't actually see certificates. So basically, think of this as an evolution of the technology. It's not a revolution. Bitcoin's a revolution, but the underlying technology of blockchain is not. So as I said earlier, instantaneous settlement. Right now, you need to wait 2 days. What happened, with GameStop should never happen, once everything's on the blockchain, because there was a delay over a two-day period with DTCC in regards to funds transfers. I'll give you another example. Well, that's digital securities, lower costs, et cetera. But to Mark's comment, I could take stable coins today, and Circle has USDC, there's DAI, there's PAX, there's a whole host. I can fund a company in an angel round in Amsterdam in about 3 minutes using my stable coin, not the Swift network. If I were to wire it, it might take 5 to 7 days. Again, transparent, immutable. You have a record, and that's where the financial system is going. We all know that. So think of digital securities broadly defined, and I agree with you with fractionalized NFTs. We're speaking to a lot of NFT companies right now worried about where the regulators are taking it. So I think, if it's fractionalized, most likely it's a security.
Yeah.
But digital securities, at the end of the day, it'll be the user interface will be the same as what you have today, except again, you'll have access to your funds faster. You had a question?
I think we have to really this with the point of view as well. My daughter's in her last year of law school, and she spent 5 months working for the CFTC. And all her cases were against digital currencies and cryptocurrency. She couldn't tell me who she was, what the cases were and everything. So there are cases at the CFTC, and that was the fear. That's why I wanted to ask you, Mark, that was the fear. That when he moves over from the CFTC to the SEC, because right now everybody in this room, it is regulated just in a different way than securities. I grew up on the security, in the DTCC. I grew up on that side of the industry. But there's plenty of cases. There's a case for 140.
The fact that there's a case okay, the answer to that, because I heard you on the last panel say at your last comment that you were skeptical about the fact that the government brings a case doesn't make it right, and they normally settle. And settled law is not law from my perspective. Number one.
Well, I'm just saying there are regulators that are trying to get into this.
No, totally. There's no totally. And they're suing Facebook. Are you not invested in Facebook? They're suing. There's an antitrust case against Google. Do you own Google?
Yeah, to your point, I think it's a good thing. It's regulation by enforcement.
I'm not fighting Mark. I'm just saying.
I think we need, can somebody summarize the question? Which is that there's a lot of regulatory pressure coming down.
Yeah.
And your
So,
thoughts?
yeah, there's definitely a lot of regulatory pressure. We view it as a positive. I'm not going to name names.
I'm not fighting Mark though. I'm just saying that people should realize that the Commodities Futures Exchange took it under their wing, and now that he's moving over to the SEC, it's not a great thing for the states.
Yeah, you're absolutely right. In regards to the chairman, a lot of folks thought that, look, we got approved in December, okay? And since we got approved, only one other ATS in the digital space has been approved. And, it's probably going to take some time before any others get approved. But there's a regulation by enforcement approach. 2 weeks ago, a lot of names in the DeFi space, one of which was already mentioned here today, all got letters from the SEC. They also got letters from the Senate Banking Committee. And that's it. It's rising to the top of the agendas and the lists, and we view that as a good thing because it's coming to bear rather than just occurring and with this uncertainty, this gray area. So eventually, we think this will benefit the entire industry.
Because there were many points that she had to research that ended up being complete fraud, so it helped the other people. I don't think it's negative.
Yeah, I agree with you.
I wasn't suggesting it's a negative. I was just suggesting it's business as usual. I'm not troubled by it. And the fact that, all I was simply saying is just because the regulators, when I worked at the SEC, I looked at a lot of cases as well. That didn't mean I brought all my cases. I looked at it, I analyzed if it was really a problem or not, and then I either closed the investigation or opened it. That's all I was saying about it.
And before we get to Maggie, who's going to go into the NFT world, I had a question in the back, I think. Just make sure you speak loudly.
This might be a question for Maggie and Sandra. Just Mark and my pal, I'm less on the legal side, but more on what you're sharing to just the average investor as far as duration and sort of stomach to be comfortable with the process and what you expect to turn.
This is the investment process for crypto.
No, it's more like expectations of return.
Expectations of return. Well, a good segue that will answer that in essence is going to Maggie. Because in essence, NFTs, for example, Collins Dictionary had NFTs as word of the year. So Maggie, why don't you kind of segue right into that and, why are NFTs popular? And we'll get into the investment specifics, but why are people even purchasing NFTs to begin with?
Sure. And before I get into this whole exciting NFT metaverse topic, I just want to touch on two things that Marc brought up. I am from China, so I have maybe a different perspective slightly.
I would think so.
I think to look at what Chinese government has done versus US government has done, number one, we need to look at their political system. China is a centrally governed country and US is democracy. Yeah, China basically blocked all cryptocurrency. You're absolutely right in preparation for the yuan launch, but yuan is controlled by one party. Yeah, they basically utilize blockchain technology for centralization, which is a little bit in a way against the initial philosophy of blockchain, which is decentralize everything. US is very different, right? US use public blockchains, right? We're looking at Ethereum, like even Bitcoin itself, they're all public chains. What does it mean? It means nobody in the world can really control them. They're truly decentralized. And that is absolutely against the philosophy the Chinese government runs with. Yeah, I'm not commenting on which political side is correct or which system is superior. I'm simply just saying that the choice by the government is mainly, I think, based on the political system. Yeah, and will China open up to blockchain in the future? I think they are, just like Marc said, they are already using blockchain technology. But the funniest thing is in the Chinese way, right? Like they always say we are, many things in the China way. So for example, NFT, it is blocked in China. Yeah, if you go on NBATopShot.com in China, is firewall. You can't go on it. Just like online sports betting, they think this is unregulated, it's speculative. So they don't allow Chinese citizens to enter any of the NFT space. Even now in the US, we view them as collectibles, right? We have not decided they're securities or even investment.
What NFTs are.
Yeah, I will start. Yeah. But I'm trying to say is the Chinese, however, are releasing NFTs within their country using company-specific blockchains. For example, Tencent, the world's largest video game company, they give bonuses and etc. for employees as in the form of NFT using whose blockchain? Tencent's. Yeah. So I just want to clarify there are different, again, parallel definition of blockchains. They're centralized, company-specific blockchains. We kind of call them internal blockchains. They're also really truly decentralized global public chains. Yeah, I can see those in parallel in the future. So that's the Chinese question. And then I would definitely go to NFT, what NFT is. So let me just start with NFT. Yeah, so what is an NFT? What is this, the biggest buzzword of the year? It stands for non-fungible token. And just by the name of it, you can think about non-fungible. It means unique, non-interchangeable. Yeah, just amendable. Yeah, it's just once it's there on the blockchain, it's there perpetually. Yeah, so that's the beauty of NFT. And why this technology is innovative is that, say, NBA Top Shots. Yeah, NBA Top Shot right now is the biggest sports NFT company in the world, right? It's less than 2 years old. It's valued at $7.6 billion. Yeah, their revenue is insane. Yeah, from both their initial release, which is Marc saying the moments, the NBA moments, to secondary trading, right? Every secondary trading happened on NBA Top Shot. They charge 5% platform fee. Yeah, so the difference of the moments NBA Top Shot sells versus the one that you see on YouTube is that this one is on the record, is on the blockchain to the whole world, transparent. Marc owns this 8 seconds moments. Yeah, the whole world sees it. Nobody can change that record, and you have all the rights to these videos. Versus I can go on YouTube, surprisingly enough, I can see all those moments any second I want in my life. Yeah, anybody, billions of people can see this for free. But why people spend 100,000 to 1 million to buy them? Because I give you an example. tomorrow, if that person who uploaded the video to YouTube decide to take it down, that video is gone. Yeah, if I own that moment, it's still in my wallet, right? I'm still the owner. Another example, YouTube is down or decide to take it down. That video is gone to the world. I still own that 8 seconds. Yeah, so that is an example of NFT. It's a perpetual record. It's transparent, and it is different than the general video contents you see on the internet. Yeah. And some other things interesting about NFT is people think NFT is really a crypto project. In my view, it's not entirely. For example, the company that we're building, Familet, we're not considering ourselves a crypto company in the sense we did not go ICO. We purposely did not launch our tokens, even that there are a lot of interest for our tokens. The reason being is once you launch your own token, then the NFT launched on your platform, in essence, should be bought by your token holders using your token, right? That's the whole value of your token. We should have a function to it. But if you do not release token, like we didn't, then we allow people to use fiat and crypto to purchase our NFT. You can come to our website. You can use Visa, MasterCard, PayPal, anything that you like to buy our NFT. And that's why I think NFT will help crypto and blockchain to go general. Because this technology does not literally rely on crypto knowledge, the general public, average people, all can participate in this industry. Yeah. Another thing I want to talk about NFT is why, again, people rather spend $1 million to buy a digital ape, right? The Bored Ape Yacht Club, 10,000 ape generated by the computer, versus spend $1 million to buy a car, right? So I have to quote a very famous 25-year-old NFT collector. He's multi-million now. He said, in our generation, we value digital assets more than physical goods. Why? He asked a question. Why you buy a Rolex? A $25 digital watch will do, right? Will tell you time. Why you spend $100,000 on Rolex? It's because you want to flex your status, isn't it? You want to show I am successful, I am rich, I can afford this. Same thing with NFT, but
Sure.
much faster.
Intangible assets, great, exactly. We got about 5 minutes. If anybody in the audience has questions, yes?
Yeah, I want to make one point. You mentioned that, this video of LeBron James, once it's posted online, it's removed. And now the person posting that NFT is the only person privy to that video. I think that's a false statement because essentially, that's the stream of lights, right, that constitute that video can be easily downloaded, right? And my thing with NFTs now, and correct me if I'm wrong, I think mostly it's middle class, right, that got into free stimulus checks the last year and a half. I mean, you're speculating on these, essentially digital art forms, right? And they're not sophisticated art forms.
I don't think the USA is the largest percentage holder of NFTs. I think it's probably 10 or 20%. I think a lot of people in Asia buy NFTs, and people actually did a whole demographic study.
Well, then I guess,
it's not steady.
Every central bank is great running. So, I guess the other point I wanted to make was that, I think it's right now driven by subjective valuation. I think, like you mentioned, that $1 million ape. My thing is that, you can essentially change one pixel of that ape and it would be undetectable to the human eye. And so I don't see the value of holding that specific piece of art.
There's a bunch of secret encrypted things in that ape. That's the part that you and I don't really understand.
No, I understand, right? So that ape is gonna have a cryptographic or digital fingerprint, right, on the patch. But again, I don't see, how this market is sustainable. I think it's right now driven mostly on speculation.
I think it's a great discussion point. If anybody can give a 30-second answer, that'd be great.
Sure. First of all, personally, I'm not saying I'm in supportive of such art collectibles at such high valuation. However, if you look at it, right, if you look at Andy Warhol's drawings, you can also change one dot there. Yeah, like if you really want to go to that extent, like, but the apes are original, that 10,000. I'm not saying I'm a big fan of them or a supporter. I have a lot of questions regarding this, but the 10,000 initial apes are on the blockchain perpetually. No one can alter that. If later on you create a 10,001 ape that looks just like one of the 10,000, you still not one of these clubs. That's another thing I want to talk about, right? NFT, why people purchase it. Flash
So
your
we're gonna be limited
status.
on time for that.
Yeah, also
I will tell you one
part of
thing.
the community.
My old work professor, Scott Armstrong, used to always say, the worth of a thing is the price it will bring. So, yes.
Question of the audience. Is the value of anything based on demand?
Yes.
Right. Right.
And, you know, and keep things in perspective. The majority of NFTs out there are, you know, valued at less than $100. So, you know, so we're talking this, you know, unique.
Could you
Set.
give a concise question?
Pat, if a major institution wanted to encroach on your space, how long would it take them to get the licenses that you have?
Yeah, this is my opinion. I think today it's probably 2 years here in the US. Yeah, 2 to 2.5. The only reason what I'm going to share is we're doing a fundraiser right now. We already have a lead. The lead's already funded. We in September, in August, we're approached by 3 different groups to acquire us, completely unsolicited. And the reason was they want to go down the ATS route. They see that as an opportunity. And what we heard was 2 to 2.5 years.
If there's gonna be a fintech panel, I think tomorrow, and the interesting thing about the old DeFi movement is that it's just a whole route around a lot of what's going on in finance today. And I think what's gonna happen is that people are gonna say, do I wanna be a player? Can I create it? Has my company ever showed the ability to create anything, or should I just buy something like that? Also, last question.
Yeah, in Arizona, they're doing some work on putting real estate deeds on the blockchain. Is that considered an NFT in a way?
It's a blockchain.
Well, no, I know it's sort of blockchain.
Yes, the answer is
but
yes.
NFTs are also on the blockchain.
It is, some people,
So what is it?
some people, it's on the blockchain, and some people would consider it an NFT because you're encrypting certain like identifiable information to purchase or sell a price
Right.
in this particular spot on the block. You would agree with that, Sandra?
I would agree with that. I would also say, there's another company out there to transfer titles for automotive. It's also a use case.
Gotcha.
I would say it could be both, right?
Yep.
And we've been approached by groups to do real world asset NFTs, fractionalized, and the use cases are real estate, commercial.
There are countries that are, Cromway in Sweden has put the entire country's deeds on a blockchain.
Okay, guys, do you have a closing comment?
Oh, no, I was just saying if anyone has any questions, feel free to come
And
up.
I'm a closing comment to answer Rob's question. We put it in our opportunistic bucket. That's how we stomach it.